Beginner's Guide: 5 Rules of Equity Investment. It can be thrilling and challenging for novice investors to get into the equity markets. Although the stock market can seem complex from an outsider's perspective, once you are familiar with its rules, your chances of seeing your money grow are high. Let's start with the basics before we get into the details of investing in the stock market. What is equity? It is best to view equity as a fundraising activity initiated by a company. A company can collect money from the public instead of borrowing money for business purposes that are high in interest. This is what's called an equity investment. After you purchase shares, you will receive a portion of the company's profits. Equity can be defined as stock, share, or other security representing an individual's ownership interest. If a person owns a share of a company, they are considered part owners. What are equity options available? 2 of the most popular options for investing in equity are equity mutual funds and equity shares. Equity shares. Equity shares are a part of a company's total value. A company makes an initial public offer, IPO, if it wants its shares to trade in the stock market. The company's total value is the sum of all its shares. Equity mutual funds. Mutual funds can be used as a group investment option. Mutual funds work by pooling money from multiple investors and investing it in bonds, stocks, securities, and other investments listed profit-making businesses. Simply put, MF can be described as a diversified group of shares from different companies. You also have other options, such as venture capital and private equity, but these are not recommended for first-time investors. How do you start investing in equity? It is a big decision that anyone makes in their life. It is therefore essential to plan and think carefully before making this decision. Investing money is about creating additional income and wealth that will grow over time and increase in value. This long but rewarding journey is worth it if you understand the basics. Learn about your investor personality. These are the questions you should ask yourself repeatedly. What type of investor am I? How much risk am I willing to take? How much capital am I willing to invest? These questions will help determine the type of investments you are looking to make and, more importantly, will help you envision your long-term wealth goals. Make the most of technology. There are many options for getting investment advice, with technology reaching new heights in fintech. Robot advisors use machine learning algorithms to help investors make better investment decisions. This can be combined with money management apps that will help you track your monthly investments, expenses, etc. Your financial portfolio will be enhanced by combining aspects of artificial intelligence with human inputs. Opt for blue chips. Blue chip companies are those with large market capitalizations and that are more stable than other companies. They are financially sound and well established, and they are the most valuable in the market. These companies are a safer investment option for investors new to the stock exchange, as there is less risk. These are 5 essential rules to remember when investing in equity investments. Investing in the equity markets requires that you follow these basic rules. Have a plan and be disciplined. This advice may sound like a life coach, but it is also relevant in finance. Without a plan, diving headfirst into the equity markets is like financial suicide. It is essential to create a plan focused on your long-term and short-term financial goals if you are a novice investor. This will allow you to create an investment strategy that is tailored to your goals and needs. It would help if you also were disciplined in other areas of your finances, such as savings and monthly spending. Investing is possible only if you are consistent. Also, remember to save your monthly budget and limit your spending. Keep track of all your investments. Some people may be content just to make an investment and forget about it. It is crucial to keep track of your investments, especially if you are a novice investor. It is important to rebalance your portfolio depending on the performance of funds. It would be best if you also kept up to date with financial news and strategies so you can use them appropriately. A financial advisor can be consulted if necessary. Avoid following the tip and avoid the herd mentality. When it comes to selling and buying, First-time investors are often tempted to take the safe route and support other investors. Even friends and colleagues might give you hot tips on stocks or funds. It is not good to follow such advice as it could cause a loss in your financial portfolio. You should do your research about the equity market and learn as much as you can. Follow the pink papers for the most recent news, and don't be afraid to ask for help from a financial advisor. Always diversify your investments. The old saying, "Don't put all your eggs into one basket," is highly relevant when it comes to investing. This rule is difficult to follow because it involves the human tendency to keep investing more money in stocks and MF that may have been profitable for you in the past. This is done to benefit from the past experience and avoid risk. The financial world is constantly changing, and what seemed safe yesterday may not be the best today. It is therefore essential to look into newer, more lucrative investment options to ensure your portfolio grows. The best approach is to think long-term. When it comes to investing, making quick money is not the best approach. While it is tempting to focus on quick profits in stock market investments, long-term investments will be the best option if you want your money to grow. Your investments will be more likely to return higher if you focus on making a profit in 5 to 10 years. You can also avoid making quick decisions based upon market volatility by taking a long-term view. Final words. You can increase your chances of growing your wealth by learning the basics of investing and following them. Earning money is not about having a job that pays the minimum wage and saving a few pennies a week. It's about creating wealth for your family and ensuring you have a comfortable life. This dream can be realized by investing. Follow the rules and continue learning. There are some best online money-making offers given in the description below, so don't forget to check them. If you like the video, then like and share it and give your opinion through a comment. If you haven't subscribed to this channel yet, then do it now, and also press the bell icon so that you can get notifications of my future videos. Thanks for watching.